Hello traders, Mark Chapman here, the creator of the trademarked Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Thursday, Super Thursday in fact, the 11th of May 2017, and it's a huge day of news for the pound. We've got the Bank of England's quarterly inflation report, and we've also got the interest rate decision. All pretty much at the same time, dumped on the market to be disseminated and traded and understood, and that's kind of interesting. There's some thoughts out there that the bank may disappoint the hawks in as far as, inflation is rising in the UK. It's above the bank's target rate of inflation, but the problem is the bank is in a bit of a predicament for a couple of reasons. One is there's an election cycle here in the UK currently, a general election, and two, we've got the looming exit from the European Union. So, to raise interest rates in that fashion, with that backdrop, any earlier than they have to, they're not going to want to do that. So a hike in interest rates is not expected until back end of next year anyway, even if it were to happen. But the hawks have been buoyed recently with inflation, believing that might be the case. But there's people out there I've been having a read around are inclined to agree that the likelihood is that the bank will disappoint the bulls and dampen expectations on interest rates, and we could see cable fall. Now, on balance, as we currently stand, I'd rather be short this pair than long. We've had some traps up in this area here, and the type of traps we had was a rat trap and a structure failure trap, and essentially those traps can occur when you've got a level of resistance and it breaks up through the level like that, it pulls back, and you're going to have pullback retracement traders go long like that, and of course they get the opportunity to do that because the price action suggests that that's the thing they should do, price breaking to new highs, but then it goes against them and catches them, and then it's pulled back, and people have traded the underside of that level. Some of them did get out because of that spike. They managed to bail out a break even. That helped with the supply, but this pair's just been a bit of a holding pattern for quite a few days. Well, pretty much since the end of April. So, but it's been really in a tight range for a few days, and yeah, it's just waiting on this big announcement at lunchtime GMT. So, for the sake of this, the risk, putting your stop above here is probably only about 50 pips. Be nice if the manufacturing data is worse, which is due out very shortly. It's due out in about 45 minutes. That would be a nice start, and you can get in there. But it really, the central bank's not expected to do anything with the interest rates. The devil's going to be in the detail. You're going to have to listen to what's being said. So you want to make sure you've got some type of access to a news feed so that you can be on top of the movement and understand, why the price is moving based off of what's been said, etc. So I favour being short the pound dollar, but you're going to have to really wait and see what the report has to say. And if you're already in this particular trade, you've took the trade, you've accepted the risk. Yes, it's a little bit of a roll of the die, but any original idea for taking the trade is probably still in play to some degree. If that's the case, then you should hold with the position, and if you get nailed quickly because it doesn't go your way, ultimately you took the trade anyway, you've accepted the risk, you can move on and take that next independent event, or you get on the right side of some nice friendly central bank rhetoric, which ultimately will see the pair go your way, and quick. You can bang some quick pips. So if you'd like to come and join me in my brand new inner circle, click the link below. Great to have you there. Take care. All the best.